I use my triangle strategy more than any of them. In fact, I look first for triangle consolidations because I like them so much. But I haven't gone into detail about these patterns in a long time, so I'm going to do that today. Be sure you don't miss it. Hi, this is Tim from TradingStrategyGuides.com. Again, thanks for all the great comments and questions in Monday's video. I love answering questions. I plan on including a few of the questions from Monday's video in my video this Friday, so don't miss them. Continue to put your questions in the comments. I don't care if it's a question that I've already covered a dozen times. I'll do it again and again because most of these concepts bear repeating over and over. Today's trade pick is a small continuation triangle on the cryptocurrency Ethereum Classic. And once again, we got a bunch of charts to look over. So this weekend it was 80 degrees here in North Texas. Yesterday morning it was 65 degrees when I left to go to the gym, and was about 45 degrees when I came back from the gym a couple hours later. And this morning it was in the mid-30s with rain. And we're expecting maybe some sleet and snow tonight. Yep, if you live in Texas and don't like the weather, just wait a few hours. Happy Wednesday. Remember to click the subscribe button and hit that bell so you don't miss any crypto setups. Let's look at the charts. The US dollar Mexican has finally dropped down here and hit the PSAR and popped it up here. So we finally got a trailing stop on this. Currently set at 18.9736-ish, locking in 397 pips. The Euro Swissy popped up and hit the PSAR and knocked it down here a couple of days ago. I had not moved my stop loss, so I left it right there on the prior one, and yesterday it popped up and hit it, taking us out at 107.24 for 171 pips. Not complaining here, considering that it was probably 4 times our initial target. But we're done with the Euro Swissy for right now. So here's a bit of the downside of using weekly targets. We got 3/4 of the way to our target, and now it's dropped back down into the triangle right down here. As I mentioned, this is a weekly candle, so I'll wait to see what it does at the end of the week. If it closes down here inside the triangle, I will close the trade for a loss. Otherwise, I'm in it to win it. Let's see where this goes on Friday. Bitcoin started to look like it was rolling over here, but look what it's done today. So that's not bad. Currently, my stop is 84.9985, locking in about $319 on this one. The Euro Japanese yen hit our target here. We moved the stop to break even. And yesterday it popped up here and stopped us out break even on the second half. So we're done with the Euro Yen for right now. ROKU had this great bearish close on Friday right near our target. I expected some retracement. I didn't expect it to come back up here and retest the triangle, but that's what it's doing. And as long as it retests it and drops, we'll be in good shape. Still in this. But if it closes inside the triangle, we'll be out of it. Dish Network has been quite annoying. Came within cents of our target on Monday. Hopefully it'll pop back up there again. The Swissy yen I showed you guys on Monday triggered yesterday right here. I'm in it right about 112.98. Stop loss of 112.17-ish. First target of 113.52-ish. The Netflix setup I showed you guys on Friday triggered yesterday right here. I am in it around 369 with my stop loss 353.44 and my first target 379.39. This Planet Fitness weekly range I showed you guys a few weeks ago could trigger this week. Looking kind of nice right now, but there's a few days left on this one. So watch where this thing closes just ahead of Friday's close. Okay, we'll take a look at the Ethereum Classic setup in just a few minutes. I want to share my process with you guys. If you don't have a process, this is probably a good place to start. But don't change a working process just because I do it this way, okay? If you've got something that works, then do that. The first thing I do every morning, after getting coffee, of course, and checking the open trades, is to start looking at charts for consolidations. I usually look through the 28 major Forex pairs first, then I look through my watch list of metals and index futures, then my cryptos list, and then I look through my active stock watch list. And that's the reason why you see me show trade setups on the same stocks over and over, is the fact that I have an active stock watch list. I'll share all these lists in the description below. But initially, I built this list by looking at charts of companies that are mentioned in the 3 newsletters that I read regularly. That would be the weekly Finance and Markets newsletter from our very own Trading Strategy Guides team, and also the Daily Hustle and Morning Brew newsletters. You'll find links to all these newsletters below. I figure that if a stock is in the news, then it's probably pretty active. I still add and remove from all my watch lists pretty regularly, with maybe the exception of the Forex list, so these do change periodically. Since I've been doing this a long time, I can spot these patterns by just opening the chart, which means it doesn't take me long to go through the charts. You guys may want to start by drawing experimental lines until you get where you can just eyeball the patterns. Eventually you'll get there though. The most important thing to remember is that perfection is not important. In fact, looking for perfection is a waste of time. If you've got the price winding up on a chart, then you've got a consolidation pattern. When I find what I believe is a nice pattern, I look for confirmation in the form of a decline in volume and volatility. Again, perfection is not necessary. There will always be statistical anomalies. Sometimes you can identify what caused them, sometimes you can't. I only try to identify them for fun. In the beginning, don't waste your time trying to assign causes to these outliers. Just ignore them. With that having been said, since I believe that a candle close is an important event, especially on the daily or weekly chart, I take a close outside the line far more seriously than just a candle push outside the line that pulls back inside the line. So when I draw these lines, I enclose all the candle bodies, but I don't worry too much about enclosing all the wicks. Remember what we're trying to do here. We're looking for places where the preponderance of the traders are just saying, it closed outside the pattern, it's time to take the trade. So the more points where a line is tested and holds, the more important the line is. The idea behind these consolidation patterns is that a growing group of traders is not taking the trade inside the pattern. More and more traders are standing aside and waiting for the pattern to break. That way, when the pattern breaks, you get all of these waiting traders jumping into the move and creating a lot of momentum. Let's take a quick look at the annoying US dollar Mexican trade that we've had on for weeks. I only say it's annoying because it took so long, because I don't really like trading weekly charts. But you can see here the pattern is huge and has been tested many times. That's the reason why I treated it as a weekly pattern. You can see how it wound up with the corresponding decline in volume and volatility. I was excited about this pattern when I first saw it because it had been respected for over a year and the volume and volatility decline was prominent. I identified this pattern in August of last year. I did a video on it in early November, and it finally triggered in early December. You'll notice there was a small volume pop when it triggered, just enough to allow me to open a half-size position. Let's take a look at a few charts where I've identified triangles, and I'll show you the process. We're looking at the Euro New Zealand daily chart right now. First thing I do is I squeeze the chart up a lot, because patterns are way more obvious to me when the candles are all squunched together like this, okay? And the first thing I notice here is this line right here, from here up through here, okay? Now, I eyeballed that line, But if you want to draw experimental lines, I just use this trend line segment tool, and I just stick the line in there about where it ought to be. Okay, you can see I included the candle bodies in here and just touch the wick here. Now you'll also notice that this has been winding up a little bit, starting up here and dropping down to here. So let's draw this triangle on out from here down to here. Sometimes you're going to have to slide the chart over a little bit to extend your lines so they actually form a triangle. Although that's not important, I do it because I want you guys to see these triangles, but it's not necessary for you to do it on your own personal charts. Now you'll notice that this pattern is not a very regular triangle pattern. Now that you see the pattern, take a look at what the volume does during the course of this pattern. You can see the volume drops pretty well right across here. These are a little bit higher than these. The volume average is dropping off. Here are a couple of examples of outliers that you need to just ignore. Here and here. Now if you went back to the Forex news, you could probably identify what exactly caused those big volume spikes on those two particular days, but it doesn't really matter. Those are outliers because as you can see, the volume continued to drop even in the midst of those two spikes. That's what I'm talking about, statistical anomalies or outliers. They're meaningless for the purposes of identifying these consolidations. You'll also notice that the ATR has dropped over the course of this pattern as well. Again, we have spikes here, 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 and even right here at the end, but I contend that they're all just anomalies. So I think we've got a nice valid pattern on the Euro New Zealand right here. Let's take a look at the next one. Here's the pound Canadian. Well, the first thing I notice when I look at this chart is this line right here. Now I also want to see if this fits into our pattern as well. And you can see that it does. Again, this pushed up right here but did not quite reach the line, but I believe that it reached the zone of influence of that line. I've included these candle bodies in the pattern and all of these points as well. So now let's take a look at the volume and volatility and see what happened there. Well, it looks to me like, again, this takes a lot of eyeballing, but it looks to me like the volume has been declining from about there. Again, we have to ignore this group of volume spikes and this one, but you can see that the volume average has been dropping as well. You can also see that the volatility has dropped from about that point. Again, this outlier is probably a result of this movement right in here. So I think once again we've got a really nice valid triangle here on the pound Canadian. Let's take a look at another one. How about this pound yen? Again, the first line that jumps out at me is this one right here. This one is actually already broken, but I wanted to point this one out to you. We could also draw that from here to find our triangle right there. As before, you can see there's been a decline in the volume up until these last few candles right here, and also a decline in the volatility. Again, we're ignoring these outliers here and here and going with the pattern from there. This one obviously is already broken, but here's a nice after the fact confirmation where price came up and tested our trend line and then dropped once again. Okay, this is an example of how I find the patterns on the chart. Now, of course, once the pattern is identified, since we've included the candle closes, then what we look for is a candle close to trigger our trade. So I look for a close below the line or a close above the line, depending on what setup we're looking at. And then of course I use the ATR for targeting and stop losses at that point. I'll go into a little more detail about my trade management in a future video, but you can also find links below this video to trade management videos I've done in the past. I have not significantly changed my trade management style since I started doing these videos. Okay, that is my process for identifying trades. If you guys have any questions about this, please don't hesitate to put them in the comments below. I will gladly answer them, and I'm going to do a video on some of the questions I've had this week, and I'll include them in Friday's video if I have time. Okay guys, let's take a look at the Ethereum Classic setup now. Today we're looking at a small continuation triangle on the cryptocurrency Ethereum Classic. A continuation triangle is a consolidation that happens during a trend run. It typically breaks in the direction of the incoming trend, but I'm willing to take a break in either direction. I also like to see a decline in volume and volatility. The volume has been consistently dropping throughout this pattern, and the ATR shows the volatility is starting to roll off right here. And here's the trade plan. We will buy a daily candle close above the triangle, or we will sell a daily candle close below the triangle. On the breaking candle, we want to see the volume bar reach up here to the volume average. If it doesn't quite reach the average, but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't have at least 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say this breaks to the upside, for example. This would be the close of the candle, and that would be your buy entry. At that point, take a look at the ATR, multiply it by 1.5, and measure that amount below your entry to get your stop loss. And measure 1 ATR above your entry to get your first target. If after entering the trade, we get a candle close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the triangle should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically I do this by using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup today on Ethereum Classic. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan that works for you, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's also my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today I have a brand new maxim for you. And today we're going to dive deep into the archive. Tim's trading maxim number 2. There will always be another trade. How often do you suffer from FOMO, the fear of missing out? So you missed a setup. It's sad, especially if it works the way you had planned. But you don't need to jump in it late or chase it. And this is what you say to keep yourself from chasing a trade. There will always be another trade. You miss this one, but you'll get the next one. So, no trade chasing allowed. Remember our daily Ethereum Classic trade plan here. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. Also remember to sign up for my free Trading Picks email list to make sure you don't miss any of these great picks. I send out 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments, or in a training video, or both. And remember, the only stupid question is the unasked one. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great hump day, and I'll see you next time.